Good morning and welcome back to Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite is Jeff Kilburg, founder and CEO of KKM Financial and Traders. This hit is for you. We're going to talk about trading opportunities based on the tweet storms, and there has been no shortage of that.
That is absolutely true. It's been amazing to see.
So what opportunities have you seen associated with President Trump's tweeting? I find it amazing in 2018 how we're seeing the markets react off to tweets.
Well, you're absolutely right, Joe. And you never think investors or traders alike would have to understand headline risk coming off of Twitter. But President Trump, he delivers. And when you see those tweet storms, you see markets move. Look, just 2 weeks ago on Wednesday when we saw the markets really get concerned about tariffs. And you saw that instant selling. Now, once it gets digested, you see even our former friend and colleague Larry Kudlow comes out and kind of calms everyone down and the markets move. But this tweet storm, it's sensational to see these tweet storms and the opportunities in those tweet storms, I think, are multiple opportunities.
Well, who's capitalizing on these? Well, obviously, the person on the right side of the trade.
Yes.
These markets are moving pretty, 4, 5, 600 point swing in one session is pretty incredible.
Well, I think it's great that there's three types of traders. You have the longer-term trader who has his Christmas list out. He's working below the market, good till canceled orders, waiting for that 10% correction in Johnson & Johnson, whatnot. That gets hit on a tweet storm. We also see futures traders trying to capitalize overnight markets. They're using the E-mini S&P 500 or whatever their future preference is, but also you're seeing option traders capitalize on this. So it is just fun to be in 2018 and to see this type of volatility. Remember, Jill, volatility goes down as well as up.
It goes up. Yes, it does. So what about your geopolitical expectations? How much do you think this is going to continue to impact the market? Because there are a number of things on the calendar, including potential talks with North Korea. You also have the Iran deal that's due on May 12th, I believe is. So there's a lot of geopolitical factors that could move these headlines.
There are, and they've actually been moved backstage a little bit, but I think it's more of a market component that we're just conditioned. We've become conditioned to all these headlines. Every week it's something new coming out of Washington, D.C., either personally or politically or tariff-wise. But I think right now, I think it'd be hard to really discount what's going on with Russia, potential reverse sanctions or counter sanctions, the conversations with China and those tariffs, those have not been fully extinguished. So I think you really have to be attentive to where these headlines are going. And the S&P 500 being above 2,700, that has calm markets. We've seen the VIX go back down to nearly 15. But as a trader and a long-term investor, I think this market is going to see continued volatility. And I do think we go back and test those lows as we see all this anxiety kind of work out in the global landscape.
Let me ask you this. 2017, I would say, was an anomaly to see prices go from the
right.
bottom left to the top right with no movement in between. Do you think 2018 has caught traders off guard? I know ones that I've spoken to are kind of shell-shocked.
Yes, I think initially yes, but you have to remember where we came from. And volatility, as you know, Jill, it's like a rubber band. So you see that rubber band get stretched to the downside and it snaps back. And 2017 was such an anomaly, to your point, that we saw that suppressed volatility. Who's been suppressing volatility? Well, it's the Federal Reserve as well as the global central bankers injecting $16 trillion worth of cash into the market over the last decade. So now as you're seeing this QT, this quantitative tightening, I think it's all coming to fruition. So we're getting back to normalization. Meanwhile, we look at the 10-year, the 2-year, 10-year spread right now that's under 40 basis points, about 40 basis points right now. So that's also talking about maybe slower growth. So all this is kind of happening now. The Fed reducing their balance sheet, volatility normalizing, and rates finally moving. So I think the perfect storm, or the three-headed monster, if you will, is sizing up for 2018.
Well, I can't wait to see what our conversation is going to be like in May, because it's definitely going to be something different than it is today.
Yes, it will.
All right. Well, thank you very much for joining me at
Thank you,
MarketSite. And traders, as always, thank you. I'm Jill Malandrino, global markets reporter at Nasdaq.